When inevitable turns into imminent, supply disruptions, surging demand, and low prices are setting up this commodity for a major run higher. According to legendary investor Rick Rule, we have two options. Either the world sees chaos or the price of this metal rises. To learn more, visit futuremoneytrends.com/u. All right, greetings and thank you for joining us at futuremoneytrends.com. I am here to talk about everybody's favorite metal. No, it's not uranium. It is silver. And our guest today is Brother John F. of BrotherJohnF.com. John, thank you for joining us.
Thanks for having me on, Daniel. It's great to be back.
Well, 2017 is looking great. It's almost, an identical repeat of what happened last year. After the Fed hike, we saw a little panic, and then we were off to the races. And here we are. After the Fed hike, we definitely saw panic, and metals are looking very, very strong right now. What is your outlook for silver for 2017, especially here in the near term with President Trump taking over?
Well, they seem to be putting in a bottom. Silver's trying to get to 17. That's a really low price, especially when you're talking about inflation adjusted. I mean, that's pretty much the lowest we've seen. You know, we got around to 850 in 2008 at the bottom of the financial crisis, and in 2003 and 4 we were around $4 or so. But you know, if you do an inflation adjusted price, they're pretty much all the same price. In 2017, I think it's going to be all dependent upon their ability to keep the game running. We just saw today with the budget resolution, this attempt to defund Obamacare, the Republicans are proposing another $9 trillion added to the public debt, and that's probably going to be $20 trillion if you take all the off-budget stuff on there. So that's going to follow the same pattern that Obama did, which is doubling the debt. I don't see any difference. Now, Trump could come out and disagree with that, but I haven't really seen any indications that he will. So it looks like they're going to try to kick the can down the road, and that is going to be the basis for what's going to happen. You know, can they keep interest rates low? What does right now they've kind of stabilized in a beginning of what looks like a bear market in bonds. And, you know, what's going to happen with interest rates? What's going to happen with the budget? I think all of that is going to impact the precious metals, because going forward, you know, we're looking at precious metals as a store of value. And I really don't think that the serious bull market in gold and silver is going to take off to the upside until we get a serious crisis. So as long as they can kick the can down the road, I don't know how long that's going to be, but as long as they can keep doing that, they'll probably be able to keep a cap on precious metals.
What about the idea? I mean, here's what I really think that, you know, once Trump is president, I mean, the president of the United States in 10 days, this guy, he tweets something about China, he tweets something about Iran, he tweets something about a major corporation, or the media talks down the economy for the first time in 8 years and he defends himself. I kind of suspect, and this is speculative on both our parts to even, you know, give this the opinion of it, but I think that Trump's tweets are a gift to silver investors and gold investors, and because regardless of a crisis or not, a perceived crisis or an imminent threat or an irate China or an Iran that is arming up because they're upset over a single tweet, I think this could be a stellar year for the precious metals. What are your thoughts on that analysis? I mean, where am I wrong?
Well, it absolutely could be. I mean, they have their foot on the market. They're preventing the rise. We've already gone over the fundamentals so many times. With silver, they're much better than they are with gold. If you're talking about a return to silver being a monetary metal, just because there isn't hardly any of it around. I mean, 1 billion ounces, give or take, a year being mined, and that's all being sucked up by industry and investors, stackers. But what's that? You know, 1 billion ounces at $17, $17 billion. I mean, that's a rounding error of a rounding error. So obviously, if they for some reason allow it to rise like they did in 2010, and it got near that $50 price, that old nominal high, it was going to blast through that, and the fundamentals say they could go tenfold from there. If they let that happen, that can happen. But we both know that they are suppressing the precious metal prices, silver far worse than gold, just because of the fundamentals. We have the admission out of Deutsche Bank that their traders were involved in it. Suspiciously, as Rob Kirby points out, we don't have the admission of any American banks being involved in it. And of course, they're the ones acting in the behest of the Federal Reserve, have the most to lose. But, we do have these admissions that silver is being rigged, has been rigged, that the people who are behind it are the bankers. Obviously, these traders acting for the banks were given a green light by somebody. Now, who could that somebody be? My guess is the Treasury and the Federal Reserve. So, what will Trump do in regards to this precious metals price suppression? I mean, if he lets the lid blow off, if he lets the truth be exposed, yes, you could have an explosive bull market at any point in time.
Why would somebody want to own something that is manipulated? I guess this extends to anything, whether it's stocks or housing. Is there anything that's not manipulated in this world, and specifically with price suppression for gold and silver? Because, I guess if we are going to own something manipulated, why not own the Dow Jones, which they're manipulating up, rather than gold and silver, which they're suppressing down?
That's a very good point. But ultimately, if you believe in free markets, you believe that markets will out in the end, and something that's manipulated down, when you suppress prices, you create a shortage. And when you artificially pump up prices, you create a glut. And the market ultimately will come back to the fundamentals. Now, with things like stocks, the problem is that those things can be changed with the swipe of a pen, with the change of a digital entry. We know about the DTCC and their Water Street fiasco. We don't even know if your shares are real. We don't know who holds them. We don't know what street name means anymore. We don't know any of these things. So stocks have an added risk. Yes, there's a fundamental value to them, but there's also a type of risk in regards to ownership. Now, if you're talking about physical precious metals, if you're talking about stacking physical silver and gold, it's true that you have the risk of them being continued to be suppressed, or being suppressed harder and going down, but you don't have the risk of them just going to nothing, or having them just be wiped out. So ultimately, if you believe in free markets, you believe that in the end, something that's tremendously undervalued that you physically hold will pay off in the end. Now, that on a different level, if you're looking at mining shares, you could get a tenfold return in the miners compared to what you get in the physical metal if you're at the right time. But if you're not at the right time, this last run we saw with like First Majestic and some of these other mining stocks, a lot of us thought, wow, this is it. This is finally the second run on these mining stocks. But then they came all the way back down about 80%. And if you're not in that window, if you're in the business of mining something that they're suppressing, they could potentially even drive you out of business. So it's better to stick with the physical unless you're absolutely certain that your timing is right. And then you're probably going to get even tenfold return if you're in the miners at the right time.
Well, so miners are speculative anyway, and this, of course, just adds to the risk of a mining company. Do you personally suggest, or do you personally own mining shares for an additional potential for profit?
I don't personally own mining shares, but I keep an eye on some mining shares that I just watch, and when I'm convinced that the precious metals price suppression is over, it may be too late to get in. But I'm willing to invest in mining shares as a speculative play. Currently, I'm not, but I'm watching them if and when the suppression ends, because I think then the returns will be phenomenal, especially on silver mining stocks. But again, there really aren't any primary silver miners, and that's a complex formula based on how suppressed silver is and what a primary silver mine is. And Jeff Nielsen's done a real good explanation of that, of how that changes over time based on price.
Sure, and almost all of them are just base metal miners. I'd be interested in knowing what your thoughts on First Majestic, just because it is the purest primary silver producer. But for gold and silver, one of the things that's always bothered me. Now, silver, I can easily see investors making 5 times their money, 10 times their money, maybe more. But with gold, it always bothered me that, here you put all this money in gold, which is money, which is great catastrophic insurance. But let's move on to now people who look at it as an investment. Let's say gold goes to $2,500. That's a significant move in the gold price. You've only doubled your money. But if it goes to $2,500, I think you would agree, I could easily see the mining stocks going up 20, 30, 40 times on a move like that. So for gold, would you suggest that mining might be better because the profit upside for gold is not as great as for silver?
I would agree with that, except for the fact that gold is also manipulated, and a lot of analysts have talked in the past about how some of the big players in gold, whether that's Barrick or others, have had questionable actions in the past that they've done in regards to debt and in regards to being involved in the suppression. So if I were to look at that sector, I would be looking at very small independent players. And again, I'm not the best at analyzing books, and I have some real questions as to how the fiduciary, how good things are really, as far as the accuracy of books in the type of climate that we're in. So I haven't really spent a lot of time doing that. I would not be very good at determining which company has got the best numbers, to make a profit. I would probably trade them based on technicals, and so I will watch the miners based on the technical pattern and how they perform based on the gold price, and then the miners. And if I were going to buy, I would be basing it on a technical breakout.
You were one of the early adopters for Bitcoin. Big resistance in the precious metal community. However, I think a lot of people have turned around because they see it as a way to opt out, similar to gold and silver. What is your current thoughts on Bitcoin for 2017? And it went from basically being dormant for 2 or 3 years from the news to all of a sudden it is now in the news heavily.
Well, it made a new high in the Chinese yuan, and it was very interesting, the reaction, because this is the first time that I know of where a central bank had to defend its currency against a cryptocurrency. That's essentially what happened. Bitcoin hit around $1,300 in the Chinese currency, converted to US dollars, and then crashed down to around $850. It's starting to stabilize now around 900. But the Chinese government is very concerned about people's ability to evade capital controls. This is something that I covered over 5 years ago when I was covering Bitcoin on the Bitcoin channel. And I was doing videos explaining why Bitcoin is so important, why not just Bitcoin, but this technology based on decentralized peer-to-peer cryptographic technology, because this allows people to send any amount of wealth, or a very large amount of wealth, with the click of a button from one computer to any other computer anywhere in the world. And this caused a lot of problems recently for China, because about 95% of the Bitcoin volume now, trading volume in fiat currency, comes out of China. So that was a big thing in the history of Bitcoin. And I've predicted that Bitcoin would make new highs. It actually did make new highs in the Chinese yuan. And it's probably going to back and fill now for a while, but I think new highs are definitely in the offing soon.
Is it still difficult to purchase? Because I remember that was the biggest thing. People would email me all the time about Bitcoin being hard to acquire. Essentially, what's happened in the last few years? Is it easier for people to own Bitcoin and sell Bitcoin?
It's become easier. it's never been that difficult. Coinbase is one of the top ones that you can buy Bitcoin on. You still have to jump through more hoops now than you used to. And now, of course, the IRS wants to know everybody who's ever bought through Coinbase. And I really don't have any concerns, to tell you the truth, because I probably lost more money on Bitcoin than anybody. I was into Bitcoin when it was about $3, and I've lost so much money on exchanges being hacked, just being stolen, etc. So I could probably book a nice capital loss. But people are concerned about their privacy. You can use Coinbase, you can use Bitstamp, you can use local Bitcoins. It's definitely not as easy as buying a stock, say, if you have your account set up. But then again, it's not that easy to set up a stock account anymore. It's not that easy to do anything anymore. So I think it's going to become easier going forward, but there's still some barriers to entry for the novice, definitely.
Yeah, you're right. I mean, it is a pain in the butt. I have accounts with brokerage companies that are just stuck because, they want all this paperwork, and it's just like, it's like my wife's like old 457 from 15 years ago or 10 years ago. It's just, it's very inconvenient. So anyway, last question, sir, for you on precious metals, with gold and silver. Not a lot of people talk about platinum and palladium. I want to know, do you follow those markets? And if so, do you recommend holding any physical platinum and palladium?
I follow platinum and palladium, and there's been not a lot of action recently on them. It's hard to determine, the big issue with them in the past had been their use as in catalytic converters and how they can be substituted one for one. You had a huge run in palladium and then crash, and then you had it in platinum. So I think the main driving factor is that issue, the industrial use. And I just don't think there are that many players stacking those metals for the savings value. Definitely gold and silver surpass them. I've bought some palladium in the past in 2008 when it touched down below 300. I think, when you see palladium in the 200s, 300s, then I don't see how you can miss. If you see platinum cross below gold a significant amount, then that's a pretty easy play because generally it will go back above it. It always has. So that's about all I do on those. Not really a lot of action lately, though.
All right, Brother John F. Everybody, if you want to check out his website, you can get daily articles, and it's not just on silver. It's also on the overall U.S. economy, stock market, and even some politics. BrotherJohnF.com is the website. Again, John, thank you so much for taking the time to be on the show today.
Thanks again, Daniel. Appreciate it.